Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. We've got, what do we have today? Let's go to J4X real quick, just to get a flavor of it. Is that it? No, there it is right there. There's the J4X and there's the Swiss, and you can see dollar's been dropping slow and steady, like a little leaky rowboat. Could be an ABC, and then they're going to turn it back up, but we'll see, because at this point, as you can see on Chicago Quant, we're well underneath the weekly sell for a second week, so maybe not. I don't know. We'll see how the new year brings. That's what's always fun about this time of the year, is that the new year itself, a whole new, I mean, we have, I guess, in trading, there's always this kind of magical situation where, normally, let me try to describe this. Normally, you can have patience, but when it comes to the end of the tax year, you have to do something. In other words, you can't just hedge it. You gotta actually transact it. In other words, there's a whole difference there between transacting it and hedging it. Okay? And so, in other words, if you've been long something and you want to take profits, normally during the trading year, you hedge it. You sell, derivatives against it. You sell premium against it. You can do all kinds of things if you're long something. You can buy puts against it, but you can do something against it, and it's not expedient. These last 6 weeks, each day becomes more expedient. In other words, it has a shelf life. It dies at the end of tomorrow's trading. In other words, you have to have it transacted in this year. So in other words, you can't just go sell calls against it or buy puts or sell futures or sell another product. You've got to take the profits in it, or you have to take the losses in it. Sometimes that is what it is. You just have to do that, depending on your portfolio and your structure and how your taxes situation goes and just all of that combination. So that's what makes it kind of magical. In other words, a lot of things have to happen. They have to happen. Doesn't mean that it's going to change a trend or develop a trend from it. In other words, just because they were selling something for the last couple of weeks, and maybe it had enormous amounts of profits in it. And so a lot of longs were getting out of it. They had to sell it. They didn't have a choice. They couldn't hedge it because they want to take the profits to offset losses. It's that tax time of the year. So when I say it, it makes it like a magical time of the year. I mean, besides Christmas and the holidays and all that other stuff going on, there's also like a financial magic that's going on. It has to happen. It doesn't have a choice. On December 31st, or in this case here, December 31st, it has to transact. It has to happen. And there's nothing that can be said more than it has to happen. So anyway, that's the magical little thing going on. And so you watch a lot of this transactions that we're seeing going on here, and you see, let's go back to, that's the weekly there on the dollar Swiss. And you can see the pressure's been on it. You can see it broke here a couple weeks ago below, but still didn't drop. And then you can see here in Chicago Quant did the same thing just last week. So this is the second week in a sell, where this is like 3 weeks in a sell. And you can see, it herked and jerked and moved around and went sideways, banged against the top end of the range. But the pressure, as we look at it again in J4X on a day-to-day basis, you see, oh, wait a second. I think I've left my, oh, let me go grab something there. Hold on a second, traders. I hear my phone and it's in the distance. It's not sitting on my desk. Okay, we're back. I left my phone on the other side of the building here, in the couple of rooms away, that is. All right, so yeah, it's a magical thing, and you can see here when we look at J4X, you see that long, slow grind down. But in many ways, it's not really doing much. It's really tight in there, really, when you take a broader view, which Robin and I were talking about this morning on analyzing different products, how we have a short-term view or a short sight and a long sight. It's really very comfortable. So anyway, that is what we're talking about there. Let's get over to the chat line and see what's going on there. But yes, that captivates me. It makes me think. Oh, look at that. That type of thing. It's got to happen. Trades need to happen, and each week over the last 5-6 weeks, it becomes even more important. Those trades need to happen. And it will not. And then it ends. It ends tomorrow afternoon. All that tax stuff, because the volume is enormously low. Open interest is not really going anywhere. It's low, and we're seeing like not a lot of buying, but we're seeing like no selling. And so the volumes are really low on all this. So it's like we're seeing just teeny weeny little adjustments on a one-way direction. It seems like. I think that's what it comes down to. Anyhow, end result is the dollar is being pushed down. Okay, let's see, what else we got to say about that? I guess that's about it. Let's see. Oh, there's a fund that collapsed 91% overnight. Let's see what the price range was. So it went from, what is that in? It's an LDEM ETF total asset. It went from 800, basically, oh no, it was like 900 down to 74, almost 75. Wow, that's 91% drop. So there's a lot of interesting things that have to happen. There's a good example of it. Just saw that on the tape as we're speaking about it has to happen. Things have to happen. They need to do that. It's weird, but it's true, Who knows, they might have had enormous amounts of gain in that thing that went up to, since March, since December, it went from 800 to 900, so there was like a 12% gain, and someone had to take that profit. They went to sell it, and there was no buyers for it. One of those illiquid assets. And we hear about those things every so often. That's why we call them the cockroach hotel. And that's what always happens. Something like that happens. And anybody wants to see what hear what the symbol is or see it on the chart, we can put it up there. But the symbol is LDEM. It's an ETF total asset fund, and obviously the assets, and also at the same time, in the spring of 2020, the product went from like 3 to 600 in a couple days. So there was a lot of build-up profits in it last year. No one seemed to take it at the end of last year. You can see that. It climbed all the way up to 800. And someone decided that they needed to get out of it. And they found out that trying to get out of it not necessarily is always the opportunity. And that's how a lot of this works in markets, the mechanics of it. So when we're looking at the Swiss there on the screen, it's just been a lazy little, like a leaky rowboat, just out in the lake. Just has a teeny weeny little leak. I mean, it can look extreme at that point where we're showing it, but when we contract it on J4X there, you see it's overall it's not much of an action compared to some of these other big moves that we've seen. And again, it's the end of the year, and that always blows our mind. It just is what it is. It's the end of the year, and there's no way of dealing with it more than the fact that that's what it is. It's the end of the year. All right. Let's see how we doing there. Yep. Hey Jordan, how you doing? It's the end of the year. So okay, we just got done doing the Swiss. Let's jump over to the euro. It's playing with a daily sell today. Give me a break. I'm like, what? Just like, just when I thought that maybe the euro is finding some type of base, it goes into it's starting to play with the daily sell again. It's like, come on. Again, end of the year noise. A lot of this is end of the year noise, and I try to emphasize that every day, every week. Now look at that. Now it's climbed back up again. Now this morning, I guess you could see, let's see if we can widen this on ours. Let's see if we go like that, right? Yeah. No, not that. that. So we go like that. There we are. And if we widen this out, you can see on Chicago Quant, there it is. You can see how it dropped this morning, and we had a little red line going for the signal, and there's your daily buy. It jumped into daily buy yesterday, and it just keeps on flippy floppy. But then again, that's the end of the year. You know, it just is what it is. And so we try to be light about it, make a joke about it, to try to remind traders not to get handcuffed into anything just because it's getting wild these last couple of weeks, or it's, you know, there's action. Oh, good, you know, finally this thing's going up. It's only going up because, you know, maybe there's a lot of people who've been shorted and they're trying to close it out. Jordan says, was looking at gold monthly chart and started to think that the long-term outlook might be, and started thinking fundamental analysis to help with the technical long-term. Well, unfortunately, fundamentals don't seem to play into it. It's sad. You know, I mean, I whine and cry about the fundamentals not working anymore almost every other hour. And on the webinar, literally every other, I don't know, every other week. No, what am I saying? Yeah, every other day. Every other day I say it over and over again. It's like, you know, the fundamentals just don't do it anymore. You know, we just don't have that luxury. Janos really had a really, you know, the head analyst for Dukascopy, had a really good webinar about fundamental trading. And he took it down, and I was like, don't take that down, it's so important. You know, it's an important thing, and you took it down. So, in the end result is that, you know, fundamentals don't, you know, we have inflation, and gold is lower since the Federal Reserve has confirmed that there's inflation. And so that's a real disappointment. We can slide over there real quick to take a look at it. I'll show you what I'm talking about here. Where's it at? Right, there's gold. And you're looking at gold, they've confirmed to us that inflation is here. And when you look at gold for the year, right there, I mean, gold is unchanged, but when at the beginning of the year, inflation was at 1.5%. Now it's at 6.5%, with a projection to 9%. Look at gold. Gold is going down in value more than it's going up. So that's fundamentals right there. I mean, the number one fundamental to gold is inflation. For hundreds of years in the modern markets, you know, or the market system, the capitalism, what you had is that every time inflation reared its head, as they would say, you know, in other words, it showed itself, people bought gold and silver. You know, it was a good inflation hedge. And paper money kind of lost value, and stocks would be bought at the beginning that had the ability to raise prices. And so that was the nature of fundamentals, but that's gone. So let's see what the first part is. The first part said gold monthly chart started thinking that the long-term outlook might be, and started thinking fundamental analysis. Yeah. So on the month, you know, let's go to a monthly chart here on J4X. There's a monthly chart. We can make it the whole page for a second here. There you go. There's a monthly chart. And yeah, you know, it you know, since 2018, yep, it's had a wonderful run. You know, from the $1,000 area or $1,200 area to the to an new all-time high back, you know, when they thought civilization was coming to an end from the corona, and then they found out that it's just the flu. And so, in the end result is that you know, that leg was very impressive. And you know, they took out the old high, you know, when they thought civilization was coming to an end in 2012. Right there, you can see the Hinky Ashies are almost the same height. And so, you know, this was where they thought, oh my God, the financial system has collapsed. Lloyd's of London is out of business. OMG, you know, there's where Lloyd of London goes out of business. Merrill Lynch goes out of business. Bear Stearns goes out of business. Deutsche Bank goes out of business. Santander goes out of business. Bank of Scotland goes out of business. And then what they did, they merged them with other companies that are like-minded. Like Bank of America took Merrill Lynch, and Bear Stearns went to J.P. Morgan, and so forth and so on. And then the banks themselves, like a Citibank, went out of business, and they pumped up Citibank. Now the Federal Reserve owns that, just like the way the Exchequer owns Lloyd's of London. And so it's like the pretend world, That had a look at the bond market yield to see if there was any correlations between the two. Good one. That's yes, yeah, exactly. Usually, see, that's where the fundamentals have fallen apart, because there's no way in the world a bond should be trading at 1.5 if we have 9% or 6% or 4% inflation. The bond should be at least close to it, if not above it. So yeah, exactly. And so you're right. That's a good thing to look at. And fundamentally, they don't correlate anymore. There was see if there was any correlation between the two. Still need to learn more about the vocabulary and economics, I think. Well, no, it's all right. We're all learning that stuff every day, It's just the way it goes. I hear you. But yeah, look at that. That's the and let's see if we can put a bond in there. And we have, let's see, where's it at? Bonds. I think we have a 30-year. Let's see, what do we have here? Dukascopy has, there's the dollar index. There it is. It's a T-bond right there. And there is the monthly, right? Yeah, that's the monthly. And so the price, when a price of a bond goes up, interest rates are dropping. So interest rates were rising when it's red, and interest rates were dropping when it's green. Isn't that crazy or what? But anyway, you can see here where they don't care now. It's a little teeny triangle. So you have a declaration by the Federal Reserve made it very clear we have real inflation now. It's not transitory. Okay? And so what do we see? We see bonds doing nothing. It's like, really? Inflation is 6%. Why aren't bonds 6%? That's because we're in the quantitative easing era, just like there was the Bronze Age. This is the QE age. There was the Stone Age. This is the QE age. And it's, this is what this is. We're in the quantitative easing age of finance. We'll see how long that goes on for. It's man-made more than evolution, but it's politically put together. So we'll see how that plays out. But this makes no sense fundamentally, and gold doesn't make any sense fundamentally, and silver doesn't make any sense fundamentally. None of them do. So it's just part of the program. It makes me crazy every day, I can tell you that. But we just put up with it and go with it. There's not much more you can say about that. We can only warn traders about it, talk about how the reality of it is not real, it's just a manipulative event going on by governments. You can see yesterday's headline, our what was it, our webinar we said cable's stronger. Sure is stronger, you can see that. This is cable here. You can see the strength that it's parked in it. We keep on thinking it's going to play with the yellow line and possibly even the green line, so we'll see. You can see the weekly is battling. It missed getting into a buy last week, but it's jumped up firmly. Funny how Euro jumped up. But notice the Euro GBP spread is not doing well. The cable is winning in that one. But that is what it is. You can see here with that. So fundamentally, the one thing's for sure: if they were short cable throughout the last, 5 weeks, something like that. One thing's for sure: they've been covering it for the last 3 or 4 weeks. They've been buying it since what is that? That's the beginning of December. Let's see, where is that? Yeah, since the beginning of December, basically. Is that December there? Where's November? Yeah, so there's the beginning of December. There's the 8th. So they've been buying basically cable since then. They've just been lifting it up. Made a challenge again to the bottom end of the range, but look at it now. It's just so obviously there are traders out there that must be shorted. I don't think they're getting long it as much as I think they're just covering shorts out of it and taking profits from catching this wonderful. Look at it. I mean, it's a great slide here. If you've been short this as an institution, you got to take some profits here. I mean, look at this. You were right there, and there, and there. It keeps on falling down. So I mean, they got to take some profits out of that. And the deadline is tomorrow. It's very clear. It's tomorrow. All right. So that's the look of fundamentals and physical reality. And thank you, Jordan, for bringing that topic up, because I scratch my head and I think about it every day. And I talk about it here every day. And unfortunately, it's a sign, it's a bad sign. It's not a good sign. In other words, I can say, oh, my quantitative mathematics is so much better, so why care? But it's not, I mean, it is, but it's not the way things should be. The way, I know I'm sounding like James T. Kirk from Starship Enterprise. And you should. See, that's the problem, is that fundamentals should have a value. It should have a value and a meaning, and they don't. And that's what's really strange and irritating at the same time, because the general media pretends that it's okay when it's not okay. Now I'm doing a Joe Biden whisper. So it's okay. I just need to sniff someone's hair now, I guess. Anyway, that's the end result, is that it's not okay. It's bad. It's a bad thing. Fundamentals should be a main pillar of our financial system. And the money managers, the money managers are doing their best to pretend that it still exists. They look at PEs, price earnings ratios, that type of thing, and they look at inflation, and they look at CPI, Consumer Price Index, and they look at the PPI, the Producer Price Index. And I think our labor numbers come out today. We have Thursday labor numbers. And then I think we had GDP that came out last Friday. That was the major big one then. And that's the problem, is that the money managers talk that stuff still like it all functions, when in fact it really doesn't function very well at all. Excuse me for taking a sip of my tea. And so that's that's a good point there, Jordan. Very good point. All right, from there we go from the cable to the Turkish Lira, which is literally our test subject. We watched two different pairs trades of the Turkish Lira, and we it's an industrialized nation, so it's part of the OECD, Organization of Economic something or another, developed OEDC, developed countries. There's there's a Commonwealth, and then there's this, and the OECD, Organization of Economically Developed Countries. I think there's like 35 of them. The United States, and Germany, and England, and things like that. South Africa's in it. What else is in there? Turkey's in there. It's out of all the countries in the world, there's only 35 countries in this organization. So, to see one of the country's currencies go the way they have is truly something worth watching. That means there's plenty of data to be able to understand it all, or interpret it, or something of that nature. So let's just go over to that right now. Let's take a look at that. There is the. Let's see, we usually start off with the Turkish Lira dollar right there. Is that it? No, that's the yen. It's right next to it. It's right in around here somewhere. Nothing up my sleeve. Right there. There it is. Dollar Turkish Lira. And so there's the daily there. And it's been trying to bounce back up for the last couple of days. We're going to widen that out for you. Let me just go down and put it on the other one there. There we go. So you can see here, the last couple of days it's been trying to bounce back up. After that, what they did is the government started to give out free puts right here. That's what they declared. And so there was like a 30% move or 20% move or something like that in the product itself, 40% move, some wild move in the currency because of that. They're going to give out, they declared it on a Sunday night 2 weeks ago, that they're going to give free puts to people who, or institutions who buy Turkish lira, and they'll just tax the population on it, that's all. And so they've basically added a new tax, a put tax in Turkey, which is interesting. And so you can see here, doing the same thing. It's in a daily buy for the last couple of days, moving up. It stayed in a weekly sell even with that big drop here on the dollar. And this was the warning line that we were watching for, and the Central Bank of Turkey also was watching that warning line. And when it hit it that time, they thought this is way too far, and they declared that they were going to give out free puts on put options on their currency. So that's where they're at now, and that's how that all works. So now what we do is we jump over to what we consider the real front contract to pay attention to, and that is the Euro Turkish lira, right there. And you can see there, it's doing the same thing. It's holding very firm. Did not go into a weekly sell on our work right there. You see that right there. And you can see it's lifting on the daily like ours is there. And so I'd imagine they'll try to, climb back. Now we were watching for 24 on this, but we weren't looking at 18. Because we had jumped through the 18 on this, so we were getting concerned that it was at 21 and the government came out. So our number really was, we did have an 18 at one point on here. You can see that we were watching 18s on both of them. So it was kind of interesting that the central bank also was watching 18. And that's how they roll there with the Turkish lira. And like I said, it's unique in the sense that it's an OEDC country, Organization of Economically Developed Countries. That's it. So we're seeing there's a lot of data and a lot of things going on there we can pay attention to and use it as an understanding of policy and what not to do and what to do and all that other stuff. And you can see here the weekly doesn't really care. It's bouncing back up. And the daily's already joined in. And I was saying to Janos about it. We were talking on the side one day, and I was like, I don't know if that put thing is going to really work too well. Once they figure out the rules to it, the traders will find a way to abuse it again. So it'll make it easier for them to abuse it. That's the worst part. Is that you can buy the Turkish lira and sell your currency. And that means that it goes down in value. When they're buying their Turkish lira, there's less Turkish lira to a pairs trade. In this case here, you can see it's been bouncing back up again after they started to give out those free puts. That's why it went slamming down from 21 to, what was that? 21 to, it was 2070 something right here. The high there is 2073. And the low now is right there at 1164. So basically 21, that's 10 points, and you're talking about almost a 50% drop, 40 some odd percent drop, when they declared giving out free puts. Now we see it climbing back up again, and so I guess it becomes, I want to say it becomes some type of carry trade now that there's free puts. So you would think that it would be going down, right? See that right there? But the arbitrageurs must have found something to lean against the puts that hurts the currency. And that's probably why they invented the policy, supposedly back in 2018-19, that it would be a stopgap measure to offer free puts to purchasers of the Turkish lira. Now you got to figure, they were thinking that in 2018, and they had established a policy for it, but was not executed on. Let's see, let's go back to J4X. And let's go back and look on a weekly basis to where it was trading in 2018-19. So basically halfway through the 18-year. Let's make that larger like that. And there is 2020. And then there's 2019. So that was, where was that? That was in the seven to the euro, something like that. 2018. Let's see, 2018. So this is 2018 right here. So they developed this policy when it got up to, what was that, like 6.5, and they decided not to implement this strategy, and then the product tripled in price. Tripled? See, so it goes from 6 and change to 12 and change to 12 and change to 24. Well, it didn't triple, but it got doubled for sure, and almost tripled. And then when it almost tripled in price from that 6.7 area in 2018 going into 19, they said, nah, you know, it's an interesting idea how to protect the euro, the Turkish lira, but we're not going to do it. And so then what they did is they turned around and you know, they let it be, but it was in their back pocket. They knew that they could use this strategy to protect the currency, or at least they think it's protecting the currency. And you can see it made a 40-some-odd% move, but it didn't go down to 6. So, you know, it went down to like 11, 12, you know, that area. So that's not the best thing, you know. I mean, that's definitely not the best thing. So in other words, it would have been nice when they enacted this thing that it had fallen back down to 6 and started hanging out down there again. But instead it got down to about 11 and change, and here we are now at 14 and change already, trying for 15. Did we even take out a 15? Yeah, we got to 15, 17 today. So as Giannis and I were talking about it, the head analyst there at Dukascopy, we were like, you know, somehow or another, I don't think this is going to play out well in the end. I think it's going to slow it down. You know, I think that'll be what it comes down to. But I would imagine there must be an arbitrage. They can short, so they're shorting the puts. You know, when they sell this currency, they're short the currency, and they are willing to write those puts. You know, sell those puts too at the same time. At least I think that must be in there. Or maybe they just give out long. Maybe they just give puts out, and they're not short puts. They're just short the currency. So I guess that's how that works. You buy Turkish lira, you get the free puts. The government protects you at the purchase price. So there's your free put. Whereas if you sell it, well, they're not making you pay puts, you're just short the product. So there must be some type of reverse carry trade going on. Imagine you're given free puts and you can be long the product. So it comes down to the interest rate of the country. And so, you know, that's what the game is being played now, is basically they're playing against the interest rate and the free put against your particular currency pair. So I'm sure the arbitrageurs will find a game. It's not abnormal for them to do that. They will. They're paid to sit there and figure out new ways to do it. That's what Doc was paid to do. Find new ways to, you know, participate in derivative trading. So that's the game there. All right, what else we got going on here? Oh, let's take a look at the weekly. Did I show you the weekly? Yeah, so it's still a red here for this week. We'll see how this goes. Let's put that line up there. It's still underneath. Our work, it's just turning out. It never went into the weekly seller, even with that big slam. So. All right, from there we go over to the Canadian. Let's see what the Canadian's up to. Right there. And then what we have is dollar CAD. You see that? You know, pressure on that. You know, it's leaking down. It's been a daily sell. You know, it's not really showing anything particular. We usually look at this to try to understand gold and oil and all like that stuff. And you can see over here on the Chicago Quant, you know, we're going into the weekly sell, or we were at one point. Now it's back up again. So we're getting close. Got down, broke the time manifold this week right there, but not into the sell yet. And we were in a daily buy, and last 2 days were, oh no, I guess yesterday, still in a daily buy, and then today it's flirting with the daily sell. That's what's going on there. It's flirting with the daily sell as we speak. Just throw it in there like that for the time being. And that's the pressure we're seeing at the moment. As you can see here on the daily, this thing's been a daily sell. On the, it went in there, when we went in there the first time up in here, let's put that in. Back there, did the same thing with that, you know, on this topping out thing. And then tried to get into a buy yesterday. It went into the buy yesterday. Let's see what the fact check shows. I don't think we've looked at fact check this morning. And let's find the Canadian. Line 20. Yeah, 1 day in a sell. Okay. So why is that? Oh, I guess that's from yesterday? Then it looks like it went into a buy, didn't it? Yeah. Shows 0.17. So that went into a buy. So we really should be on the Canadian. We should be like this. That should be right there as a 1. And it's not in a sell. And now today it's could go into a sell. Oh, I love the end of the year. Crazy times, crazy actions, expedient actions. All right, so there's the Canadian. Because we're seeing this little drift down, we're assuming that gold should be going up, right? I mean, that's the, you know, because this has been weak. If this is weak, again, you know, this is strong against the dollar by going down. So in other words, we see it going down on the chart, but it means it's getting, there's more value to it. You know, there's less Canadian to buy a dollar. That's what it comes down to, okay? And so now let's go to gold. I know that number is wrong on the sheet there, but let's show you gold to begin with. Right there, there's gold. And let's do it right here. And gold is flirting with a daily sell. Now it's not. Look at it, it's back above. So we're lifting it back up since we put that red line in there this morning. And you can see there it is trading at 0.20. So it's holding up. So we can remove that now. And but what's odd is that the weekly is getting smackadoodled, you know, all week long. It's more like a flat line, like we had this one here. It's like a flat line again up in here. And so we're seeing firmer gold overall, like we're seeing firmer Canadian. Where's Canadian? I'll show you the firmer Canadian. Do it over here like that. You see it's going down, so that makes it more firmer. So gold is going up. Okay, that makes sense. And so that's what we're seeing there now. But the weekly's doing us something that we're a little surprised about, and that's that push down we're seeing there. Again, going back to Jordan, where the fundamentals are just out the window, gone. Crazy, just crazy. All right, so then we take a look at the oil complex from there, and we look at Canadian also, because they're an oil country. They're pretty busy, 3-4 million owners, something like that a day. It's a lot for a country that has like 30-some-odd million people. And so you can see here, you know, oil's been moving up, which makes sense because Canadian has been right there, going down. And let's see what it looks like over here on Chicago. Chicano. There's the February oil. It's trying to put a little pressure on it right now, but see it's 15 on the edge here right there. See that right there? It's on the edge, so it's still a plus. And we're fighting to go into a weekly buy at the same time right there. Now when we talked about the back month that we followed for somebody, and that's through the weekly buy last week already. Was also looking at gold short term on the 1 hour time this season. Yeah, you know how I feel about 1 hours. I mean, we can put a 1 hour up there for you, but you know, they're so less accurate. I really suggest, if you're going to pay attention to hours and days, go with something like 4 hour or something like that, or you know, something long, 6 hour or 8 hour, something on a 24-hour period where it's like three bars a day. Those short-term hourlies are very inaccurate. I really have issue with that. I have issues with hourly charts. Issues with minute charts, except for a 3-minute chart. I can put up with a 3-minute chart. But after that, anything above 3 minutes drives me crazy. 5 minutes, 10 minutes, so forth. Less accurate. Definitely less accurate. Let's see where else. So that's it. That's the Canada. So with those bullish signs in basically the oil and gold sector, we would look over to the South African rand and think, ooh, it must be going down. And the dollar must be going up against it. And so let's go find it. Right there. And let's put it up on Chicano. And where is it? Right. There it is. Got it. Activate. And it's doing the opposite. There's the fundamentals again. This thing has a good mind of what's going on. It's trying to tell us, don't buy the metals, which is so weird. It's so weird, as Jordan was talking about, as the fundamentals. The fundamentals are screaming. Metals should be bought. It's been screaming that way for a bunch of years. And, since the QE age, it's been screaming it, and they just don't respect it. So, central banks have the power to put that type of pressure on a product. I guess it's like the little Dutch boy with the finger in the dike, Sooner or later, it bursts. It explodes. And so the water comes rushing in. And so that's where we are at the moment. That is, I guess, the best way to describe it, is that the South African rand should be going the other way. So gold traders, take your profits, run. We'll see what happens after tomorrow. See how Monday, Tuesday of next week starts to play out. We lose the expediency. Let's jump over to the ruble. Let's see what the ruble's doing. Mr. Biden is going to have a conversation again with Mr. Putin. God, well, don't you just want to be listening to that or what? I mean, you got the pictures I saw. They had pictures of Putin talking to Biden. It's a telephone conversation or some type of Zoom type thing, And you just got to imagine. I mean, I saw Putin. He looked like he was like having a fun time, just laughing, and you could see he was giggling, and he's probably like, this guy is a moron. and Biden has like 4 people in the room at separate desks or something like that, and they're probably like listening to the whole conversation and yelling over to him like, say yes, say no. He doesn't know what's going on. It's the weirdest thing. It is the weirdest thing. What a powerful nation we are that we can have such a bozo running as running the executive side of our country, and the socialists running around like mad animals, and life is still happy over here on some level. Thank goodness for the U.S. Constitution, honestly. And I'm not talking about a ship. We're talking about the written laws. It really stops these crazies from being crazy. And there's the ruble. You can see it's moving back up again. Maybe that's because of the phone call today. I don't know. But that's a definite big move there. And I think we went into the buy on that. Did we have it up on the screen yet? Let's get it up on Chicano. I think it's been in a buy for a couple days, right? Yeah. It gave us the volatility signal 3 days ago, the red and the green. And it went across the line. It was in a plus. And so we've been in a buy since here. Let's move that one over like that. Throw that in. There we are. So, and we're in a weekly buy. It flirted. You can see there, it's at, where's it at? It's at zeros. And plot 1 is at minus 0.1. So, I mean, it's right on the edge. It's in a weekly buy. It needs to close underneath it. I think it got underneath there for a little bit and then started to turn back up with the dailies. And so that's where we are now. So we are like right on the edge. This thing is just on the edge. Who knows what Biden is going to do? Oh, my God. One thing is for sure, he's not going to be able to get it through the Senate, so it doesn't really matter. Whatever he thinks he's going to do, he's not going to be able to do it too well. Let's put it that way. But Putin must be laughing. Oh my God, it must be a funny circumstance for Putin listening to Biden talk. It must be like, oh my God, I want to be an American. Putin must be thinking deep down inside, we need the Constitution of the U.S. It'll really make our country even stronger. I'll tell you, the next country that picks up the U.S. Constitution and supports it, wow, their country is going to go economically through the roof in a positive way. From there we go over to the yen. You can see the yen has been just drifting up, up, up and away. That means it's losing value against the dollar. There's more yen to a dollar. And so that's feeling the pain there. Let's see, if there's 120 yen to the dollar versus 110, it means that you have to spend more yen to get a dollar. So it's not the most positive thing there. For the yen, that is. Boy, I remember I used to trade that product. They were like 300 yen to a dollar, 500 yen to a dollar. I remember trading it. I want to say there was 800 yen to a dollar one time, but I do remember trading, 500 or 600 yen to a dollar. So now that it's gone down under 100 yen to the dollar or something. I guess let's see, if it's 500 yen to the dollar, and now it's only 114. I guess it's gaining against the dollar. In the long term, it's been gaining against the dollar in value. Because now you can take 114 yen and buy a dollar versus saying 500 yen to buy a dollar. Last but not least, we drift over to... cancel. We drift over to the Mexican peso. See what that's doing this morning. It'll spit out. There it is. Peso, peso, peso. There it is. Activate. Let's take a look at it over on J4X. Right there. Now the peso is still on that little leaky drive, just the way Swiss is. Just slowly, just sliding slowly down. And and Jordan, if you do want to see an hourly chart, I'll put it up on there. But it's less accurate. I wish you would drift over to the spatial charts. You're gonna find them to be much more profitable. But I can put an hour chart up and show you the difference between an hour chart and a spatial chart, if you'd like. I can do that. I like to answer all questions, so I guess is that what you're looking for mainly? Was also looking at gold short term on the dollar at a 1 hour time this session. Yeah, we could take a look at that if you want. We can look at the 1 hour versus the the spatial chart. That's no problem. We can look at it through a full 1 Tesla or something like that. Get an idea what a spatial does. I'll wait for your answer to that. And so, yeah, there's the peso, just slowly sliding. And you can see it on the J4X. Nice and steady, slow sliding. A, B, and a C, finishing off that action there. Yeah, I can do that. All right, let's do that. And let me set up from there with the J4X too. We go over to the metals complex. That's what we do. So we're going to throw silver up on the J4X. Now let's go to the hourly. Matter of fact, we could do is this. We could do it. We'll do it on J4X too. So let's go find a spot and put the hourly gold up there. I think we have it over here. Your hourly chart. Okay, there we go. We were looking at the euro against the dollar on a Tesla versus an hourly for you. Or was it British pound? I think it was British pound, right? So let's do this. And we had these things in there we were looking at. We were looking at the fast and slow stochastics and what we do on Chicago on the J4X. So let's stick an hourly. Let's put an hour. You know what we should do? Should we do that? No, okay, let's do this. Let's do the hourly thing. So there's one, there's hour, there is gold. Let's go to G. So is it March gold, I guess? I thought it was February gold. GC. Let's see. Something don't seem right there. G. There it is. February gold. There we go. And here's the hourly. It'll fill in. I think we're, yeah, there we are. Let's give it a refresh. And there's your hourly. You can see it went into the buy here and climbed, and then they give you that sell and took it all away. It hasn't given you a sell yet, it hasn't closed. You see it was in a sell here for that slide, and then you can see the lift here. Now, let's copy that, and let's paste it. And then let's do this. Let's turn that. Let's do this. Activate that and delete that, like so. Okay, now we go back to the bottom of that, and there's your hourly, right? So now what we'll do is we're going to copy that again and paste it, and we're going to put the spatial one in there instead. Let's see what the spatial one looks like. So we're looking at that, the setting, and we're going to go with 369 in ticks. That's what I refer to as 1 Tesla. Sometimes it can be like 396 too. And then we're going 200 bars back. Let's see this fill in. And there's no doubt that it okay, so there's a, like that, so I guess we got a backfilling. It's got to fill in the bunch of bars back. Maybe what we should do is make it 1 day back. Two days back. Let's see what happens there. Okay, there we go. There's 2 days back. All right. So now you can see we go into a buy here, right there, and let's see how long that lasts. So that's from 3:15 to 3:33. So that's like 20 minutes. And then that one is 3:33. That's 25 minutes. That one is, let's see, what is that? That is 58 to, that's 24 minutes. All right, so let's try a 2 Tesla. So we're going to go like that. That seems to be kind of the mainframe. So let's do 693. 693. Is that right? 2 Tesla. Let's see if how that looks. I think we have to go back a little bit further time-wise. So we'll put like 4 days in there, like that. Okay, there we go. We'll see it fill in. So now what we have is we have the hourly right here. There's your hourly. Okay, now let's take a look at the spatial. It's still filling in. Let's make it 3 days back. Probably fill in faster. Now it's still filling in. I'm kind of surprised it filled in for the 1 Tesla, whereas the 2 Tesla, it's having its issues. Let's just go back to the 2-day and see what that does again. Because it looked like it had filled in for the 2 days. Okay, so I guess what I'm saying is, you can see here, let's see, so it goes into the buy here. That's at 3:44. The previous one was 3:09. That's 30 some odd minutes. The next one was 3:44 to 4:28. 3:44. So that's still way under an hour. Let's say 44 is 16. So it's like 40 minutes. So we might need a 3 Tesla. Let's see what 3 Tesla looks like. 963. There you go. Okay. So now, let's go back a second day. The 3rd day. Let's go a 3rd day back. See what happens there. That's the only problem with a lot of these spatial charts, is it takes a while for some of the data to fill in. Let's see if we can go with a contract, see if the contract fits. Ticks and contracts are usually, okay, contracts a little bit better. Let's see how this fills in. Usually I use contracts more than I use ticks. Let's see how that's going. Let's go to 2 days, see what the contracts look like in it. There we go. Alright, so here is, let's see, I'd imagine this is close to an hour, each one of these. So it goes into the buy here. That's at 6:13. And then that's 27, that's 28 minutes. And then I guess the slow time we were looking at in the European hours, 2:06 to 2:06 versus 2:21. Interesting. They were trading them actively. I guess they're 3:20. That's 14 minutes wide. So these 963 contracts, still not wide enough. But you can see the difference on the daily. It's filled in. So in other words, it goes into the sell right here at 8:02. Right there, 8:02. Okay, and it's priced at 1,803. Now let's go to the hourly. And it still hasn't gone into the sell yet, but it has fallen from 8:05 down to 8:01, where it got long at what is that? 8:02. So it got long at 8:02, went to 8:05, and is falling down, and it's not giving you a sell signal. I'm not making the best example, but it is showing the more profitability. You can see here, let's see, when did it go long in here? So it went long at 4 in the morning. Let's go take a look at the spatial one in contracts. And it went long at 3, an hour earlier. So it went long at 798.8 at 3 in the morning. And there is the hourly one, went long here at 8:02, basically, 8:018 at 4 in the morning. Okay, right there. So that's, you get this gain out of the spatial. You're already long it. And spatial's just better. It's just way better all the time. You have to just figure out which one is comfortable, which cycle. 1 Tesla, 2 Tesla, 3 Tesla, that type of thing. And in this case here, you can see, it goes into the sell here and just goes down. What is that? What time is that? That's 21:38 of yesterday. Let's see what 22 looks like, or 21 on the hourly. So there is 22 and 21, and it's still, oh, let's widen this. With our math, it is in a buy still and breaks down at 24 at midnight, 2 hours later in an hourly. See what I mean? It's 2 hours later before it goes into a sell. Whereas on our spatial, it went into the sell at 21:38 at 2200 hours. So 2 hours earlier it went into the sell. And you had a nice successful sell-off. And it goes into the buy here at 3 in the morning. Right? And let's look at 3 in the morning on the hourly. Three in the morning is right. There's 3 in the morning. The hourly is still showing it in a sell. And then 4, it goes into the buy. See, it's a head, it catches this whole move right here. So that's the only reason I'm trying to push you away from the hourly versus the spatial. All right, traders, it is the end of the webinar. It's past the 8:30 number, and we will see you all tomorrow, the last day of the year. The tax selling will be done by tomorrow evening. Hooray, hooray. And the tax buying will be done by tomorrow evening. Hooray, hooray. All right, this is Doc from North America saying arrivederci. Catch you all on the flip side. Happy trails to you. Until we meet again, Happy New Year to you, Jordan. Happy trails to you. To all our trading friends. Later, traders. If you don't see me, I'll see you next year. Then I'll be able to say the cheesy thing constantly. Geez, Jordan, I haven't seen you since last year. Let me just say this one last thing. I posted something on the Facebook where someone said, I'm going to order a pizza at 5 minutes to 12 on New Year's Eve. And then when the guy shows up, I'm going to say, I ordered that pizza last year. All right, traders. Bye-bye.